Thank you very much. Thank you very much for the introduction. And I think today we are powered by the coffee culture because all of my wonderful panelists, if I understand correctly, are based in Europe and it's quite early here. Hi, everyone. How are you doing?
Hey.
Good.
Hi, everyone. Great to be here.
Well, as a journalist, my usual mornings start with reading news and press releases. And 99% of all this content is usually about some achievements of the project, deployment of a new network, deployment of an update, whatever. But what I really want to invite you today to talk about is not about the achievements, but about your beliefs in the technology. Something that you could expect in the long term, something that you believe in, and being a little bit an ideologist of the industry, but also realistic leader, because you know about the technology more than anyone. So I want to ask you, what is the real potential of this decentralized financial technology? What would be the ambitious goals that you would like to see implemented? And let's be ambitious here and not limit ourselves with any time slot. So what is the technology? Min, can I start with you, please? I see that here is powered by coffee. What is the real potential of the centralized financial technology, in your opinion? What is there that we are maybe not always talking about, but believe in?
I think the beauty of that is, decentralized finance means many different things to many different people, and that's not necessarily a bad thing. A lot of this technology is premised that big tech and financial institutions haven't really innovated to the level where they're providing users with products that are relevant for their needs today. They're contextualized based on local requirements. They fit the requirements of the modern day user that's global, that's wants access 24/7. And I think enabling the definition, the creation, utilization of value that's very contextual in a way that's defined by certain communities or age groups, and building interoperable bridges to change how we think about certain workflows, essentially, is how we kind of structure the payment rails and the value transfer rails of tomorrow. And because it's so exciting and providing developers with this new read-write access that they never had before that, a lot of innovation had to happen sort of on the front lines of financial institutions rather than enabling access to anyone who had an idea. If you're someone who's really, really smart and wants to build the next Robinhood, would you want to do it on a century-old infrastructure, or do you want to actually build it on composable smart contracts to a group of users that are willing to try new things immediately, and also you get global distribution from day one? I think the answer is pretty clear for a lot of people. I think another thing, for example, that I'm very passionate about is that is on the privacy side. Ultimately, with regards to our financial data, our preferences, this is all being harvested without our permission, whether we like it or not. And currently, there's no alternative. I think decentralized finance, at least for me, provides a way for the segment of users who really choose that route to attain, the privacy that fits their lifestyle. And that's something that is meaningful, not just on the individual level, but also on the institutional level.
Very interesting. Thank you very much, Min. Rune, what is the decentralized financial technology for you? What is the basis of it, and what potential do you see in it?
I think that the most important thing of DeFi and sort of the decentralized advantages that comes with blockchain is, in the end, it comes down to efficiency, right? I think that's always the number one thing, is that when you remove middlemen and you sort of open up a system, then you're just going to get a better outcome. Because like in traditional finance, for instance, what happens is you have these gatekeepers and they all have to take sort of a cut, right? They all have to have their proprietary piece of the puzzle. And then you get something like DeFi, where you have, anyone can access any service, and you can sort of access it directly or through, like sticking things together and making these combined products. And the outcome is just you just get like the best possible access to one particular service, because it's just when things are so open and so sort of freely accessible, it's not possible to create those kind of like gates, right, where you can extract a little bit of extra value. And so in addition to that, there is this, but somewhat similar, there is this element of just like permissionlessness and accessibility. And I think a really good example of that is how in Maker, right, we have it's a peer-to-peer collateralized lending protocol on one hand. It's also a stable coin. That's sort of what it's a little bit more known for, but actually the ability to collateralize and then borrow money through the system is actually just as fundamental, because that's sort of those are the fundamental pieces of a financial system, right? And one of the things that Maker has been working on, the community has been building towards for like this, basically for this whole year essentially, is the ability to lend money to real world businesses, right? And that's a moment where if you can do that through blockchain and DeFi technology, what ends up happening is you're able to like basically circumvent some of these traditional middlemen, right? In particular, banks or like lending companies that are the only ones that would lend to particular projects, especially smaller businesses. And that's where like DeFi is actually able to just cut through a lot of that, and then instead extend credit directly, right, to small businesses. And in this case, it's like, as a small business or medium-sized business, right, you can actually borrow directly from a monetary system. So it's kind of like you give a small business the same type of access that the largest banks in the world have to a central bank, right? This is kind of like direct monetary credit access. And of course, at this point, Maker is still pretty small, so like it did just hit $1 billion in circulation. So that is, on one hand, that sounds big, but it's still small for like, if you compare that to a central bank, obviously. But these efficiency advantages and this sort of the ability that you can actually provide access where traditionally that has not been possible, that's already like, I think, a really big step forward, and just shows the very beginnings, it's like the tip of the iceberg of how this technology will really like impact the real world and start transforming business models.
Stanley, bringing this question to you, but also I would like to for you to think about the community that can benefit of the technology. Rune mentioned small businesses. Who are the actors, in your opinion, who eventually will benefit the most from the DeFi applications?
Yeah, I see kind of to some extent that like decentralized finance is kind of like internet of finance, in the sense that when you look at financial technology, you see quite often innovation happening in the kind of like user front end, getting kind of like a better services on the user accessibility level. So kind of like fintech is practically filling those gaps that we have used to use, let's say, banking software that is very difficult to use or not so accessible, or that isn't tailored in the kind of like a real life use cases that we have been kind of like moving towards, for example, like mobile banking and so forth. And because of the banking infrastructure has been very, very kind of like heavy, the fintech startups has been doing a very good job on creating from scratch very efficient systems on the user level. And the way when I look at decentralized finance, I kind of see the very same thing happening, but on the backend level. So we kind of are creating this like a system, like a network where all of these different innovations are talking to each other. Because once you deploy something to the public blockchain, practically all of these smart contracts are communicating with each other. And this is kind of like the key difference here, that when you can actually access without a permission to anything that is available to you, it basically means that all of the innovators that are deploying their software, their systems and product services into the blockchain network, what happens is that there is constant competition of creating better services and making more efficient services. So, for example, when today you want to take a loan, let's say from the blockchain, you have multiple options there, and protocols are kind of like competing and also at the same time building different kinds of models, risk models, to serve their different kinds of use cases. And what's cool about this thing is that I see like two important points in terms of like community-wise. One very important, at least for me, is the kind of like development aspect. So now anyone, as Min said, that anyone practically in any place of the world could actually just build the next innovative part of the whole finance infrastructure that is accessible to in a global sense. And I see kind of like community aspect also, the fact that when you can access these services, like for example in Aave, we work a bit differently than, for example, the MakerDAO system. So it's a secondary liquidity market in the sense where you can lend out funds and borrow funds, or delegate your credit to someone else to borrow. But in fact, when you for example take DAI, which is made by in the MakerDAO system, when you collateralize assets, and you can take that DAI and you can put it into, for example, the Aave protocol, you get in return so-called A tokens, so Aave, and that grows algorithmically in your balance. And with what it means that you practically have a global savings account, because as time passes, you are earning constantly and it's directly credited to you, which de facto means that you have global permissionless savings accounts wherever you are. And it's very valuable in the sense that if you have lack of access to the banking system or not enough opportunities. And also it's kind of like beyond Aave in the sense that you can fairly quickly change your kind of like savings accounts to something else that is already existing in DeFi, and it happens very efficiently and quite quickly, because once you're connected to the whole network, pretty much you can switch and do anything, and others can build services that are actually making this more efficient for you and creating front ends that kind of like serve you better. So that's like a super cool part. So you see these protocols kind of being built, but also you can also build different kinds of user experience. And this is kind of like one of the other fascinating parts that I see from community perspective as well.
So there is a great potential, but we also agree that, well, we're still in its early stage. So my question to you would be, what are the next steps in order to deploy more, to develop the technology, to adopt the technology? Rune, what are your thoughts about this? And let's be ambitious. I'm not talking about the next steps in 2021, but let's think of the next at least 5 years.
Yeah, I think that, I mean, this is what I'm always talking about, what is sort of the next step for DeFi, right? It's about integrating with the real world. That's kind of what's coming next. I mean, I think that at this point, DeFi, the sort of the initial, DeFi's kind of like cleared this initial hurdle of like really proven itself as a technology when this like money Lego concept emerged that Ami and Stanley both mentioned, right? Where you have so many DeFi protocols seamlessly working together, and it's pretty amazing to see right now how they just all like interact sort of in all sorts of ways, and you know, sort of like stack all of these advantages on top of each other. But the problem is still, like, the thing that still limits the DeFi space is just that all of these advantages and all this innovation is still only available essentially to people that are, that speculate on crypto. And then a small, and it's already, of course, going slightly beyond that today, but like it's not really in the way that it has to for DeFi to actually make a difference, right? So I think that at some point the floodgates will essentially open, right? Like at some point there's going to be enough steps of connecting essentially like traditional finance with DeFi and being able to set up these types of be able to provide these kind of innovative advantages that DeFi provides into, again, like let's say small businesses or saving, like another example we have for Maker, right, is like people save with DAI in South America because it's like a good way to escape inflation, right? And that it's still some people doing that, but it's not like, it's not everyone is doing it, right? It's not like happening at sort of a larger scale yet, but I think both of these advantages of, let's say, small businesses getting access to better credit through a DeFi protocol, or people in a region being able to say, like the tech savvy people initially being able to save more securely and on better terms as well. Like at some point, if this advantage is real, right, which it certainly is, because it also gets this boost from the access to the broader DeFi space, right? So once you're doing one thing, as Stanley also said, right, you can suddenly do all of the things, right? And once sort of those advantages really start to be clear to basically the broader market, then eventually you'll just see like a rush, right, to like integrate, to take advantage of this, to be the first mover. And so like 5 years from now, what I imagine is basically that there are entire business models that are just about sort of like accessing the DeFi space and accessing these different protocols and then making them available to sort of real businesses and regular people, and just like basically spreading it to spreading these advantages out to people that don't care about crypto or don't care about DeFi. And then one thing that'll be really, important to sort of watch for is when all of this sort of blockchain stuff is hidden away, right? So you actually don't have any idea that this is some blockchain stuff that's happening, because nobody really cares about that, right? They just want better terms. They want better interest rates on their deposits, or they want cheaper rates on their loans, right? They want it to be faster and and better, but they don't care about some blockchain, like the fact that it's a secure blockchain or something like that. That's like only a small amount of people actually care about that kind of stuff. Yeah.
How should we involve more people? I mean, what are your thoughts? I mean, we definitely need to make the community bigger in order to develop the technology and its adoption. So in your opinion, who should be involved and how they can be involved in order to deploy everything that we've been talking about the last 20 minutes?
Yeah, I think certainly, Rune mentioned a really important point where, we talk a lot about institutional adoption of crypto. And, I think it kind of means like many different things to the different people. But right now, like a lot of the use cases that we see are addressed at the needs of retail, and probably not just retail, like, most people don't actually trade stocks or whatever. Like it's more people who actually have the risk appetite to speculate and can put their assets at risk. So I think while we've, kind of really pushed the envelope on making that available to everyone, well, are we really making it available all retail or other people who could really benefit from this technology, but you're sort of solving different business issues for them, like SMBs or like Rune mentioned, or startups where for them participating in DeFi could provide them with like another month or two of runway. I mean, that's insanely valuable. I think on that point, one thing that we do also have to bear in mind is like, how do we actually step up security of the space? If you look at some of the vulnerabilities that have happened in DeFi, I think despite a lot of people's best attempts, like close to like 1% of like TVL has been compromised one way or the other. And I think any of us can safely say, if you're like approaching a real bank, or would you encourage your grandmother to put her money into a real bank where like they're like, okay, we're probably going to lose 1 or 5% of your assets, put your assets here at risk. So I mean, we see a very clear path to, in 5 years' time, this will not be the case, but it doesn't happen by itself. I think it happens because of the very intentional steps of all ecosystem participants to keep user interest top of mind. And I think that also enables us to have a better relationship with the regulator. Regulators around the world, ultimately, their number one jobs, contrary to popular demand, is not to stifle innovation, but it's to protect user interest, right? And I think if we can actually demonstrate that, it enables a better dialogue with the regulator without actually, that's a bit more constructive and providing frameworks and sandboxes for innovation and, developer tooling and just better building to actually flourish, across the globe.
Very interesting. Stani, what would you add? What are the prerequisites, but also not only within the decentralized space, but also outside the decentralized space, in order for the decentralized technology to be deployed on a more mass scale?
Yeah, I think kind of like, I've been looking at the whole adoption for a few years now, like especially like, it was it last week, the DeFi space, depending on how you calculate, there was roughly over 1 million addresses that were using DeFi, and year ago it was less, and way less. So the adoption is happening to some extent, and in the kind of like a user level. So it's not only anymore like geeks trying to kind of like use DeFi and kind of like in a smaller circle, but it's actually like getting more attention from various places. And I think, of course, like incentives has always been driven, when you can earn on your assets, that drives a lot of traction. And when you look at traditional finance and how things are there at the current moment, with the negative interest rates, and kind of like besides that, the whole monetary system, how it has been built, it definitely leaves kind of like a narrow gap for to earn for an average consumer, or even for a business to actually earn yields on their deposits. And kind of like when you see this alternative way, and which is decentralized finance, where the yields are higher, there's higher incentives, but also there is like many other very good value propositions, such as that you don't give custody, and you see everything that is happening very transparently. You can practically quantify risk to some extent better when you see this transparency, and hopefully when there's more tools to quantify, it really starts to bring a lot of curiosity. And of course, like one of the things that is a bit challenging is kind of like how to secure the system, because the yields come just from some extent from the fact that there is risk involved. But as time passes, some of these DeFi protocols will become more battle tested. So you can assume pretty well that kind of like the risk is decreasing in that sense. And that helps quite a lot of adoption and de-risking, especially if you get insurance. So once kind of like this is done, I think we will get more kind of adoption in terms of institutional level. But I think in terms of like mass adoption, I think it's hard to say like when it happens. It can happen next year. It can happen like in 5-10 years. It really depends on how quickly traditional finance realizes that this might be the new back end for finance, and once this realization kind of event happens, I mean, that will change everything, because you can't anymore build without understanding and thinking that if I build something, like, what about the fact that there is actually a network accessible to anyone with financial services? There's assets moving fairly quickly. Business can get liquidity out of DeFi, so it's not anymore just putting funds into DeFi, but it's a two-way stream. So once you can't ignore anymore, that will be the kind of moment for DeFi to get larger audience. And I think this is kind of happening a bit now, in my opinion, because we see more institutionals, more banks even, and neobanks looking at what's happening in decentralized finance and how to get part of it. So once you're building your software, your offerings, and you have to think about decentralized finance, you have to understand what's happening on Ethereum. This will be the critical moment, and kind of like in that realization process, you also realize that like that probably is the thing that will kind of like be the finance. So I would say that like the main thing for DeFi is not just to be DeFi, but to be DeFi. So when that happens, I think that will be the mass adoption.
Very interesting. Min, what is your thoughts about the ideal balance between decentralized and centralized finance? And how actually can we evaluate the value of the centralized financial system from the side of the traditional finance?
Could just so I understand the question, like as in what decentralized finance sort of brings to centralized finance, or
and what is the ideal balance? But like, okay, let's suppose that the ideal scenario can be that everything is decentralized, but well, that maybe won't happen anytime very soon. So in any case, we need to combine both systems. So what would be the ideal balance in your opinion, but also from the side of the traditional finance, like the institutions that are getting involved into decentralized finance? What is the balance for them in order for them to keep being effective and efficient in their terms, to keep moving, applying both traditional and decentralized financial services and technology?
Yeah, I think it's kind of cool because it's like pick your own adventure, really. With ultimately, decentralized finance is an enabling technology that allows you to build really cool applications on top, integrate it into your business processes and your workflows as people need. And as we have like more hardened systems and better tooling, it becomes even more relevant for institutions who are in centralized finance. I think about it as like sort of like in the payments world, you sort of have this concept of shared wallet. And when you think about, say, the evolution of means of payment from cash, like now you have debit cards, you have credit cards, now you also have mobile payment. And they're all somewhat interoperable with each other. And just because we have credit cards, like, it doesn't necessarily mean that we don't use cash anymore. Even though I think in Europe, we're pretty far out. But like, if you look at a place like Singapore, for example, like cash is still actually like pretty heavily used, like despite technology being very efficient on the payment side, simply because there's a lot of cultural and local context that results in those preferences. So I think ultimately, like, it is like another tool in someone's toolbox that people can use to build new applications. And what's really important is having, making sure that everything is sort of interoperable and easy to integrate so that people can ultimately, like, do their online tracking and reconciliation. It's ultimately, if you think about, say, the idea of like personal wealth right now, like, it's still very, very fragmented, right? It's not necessarily a good experience for a user. If you think about, say, like, a business that actually needs to do its monthly book, like, that's like quite impossible in a lot of ways. But I do think, like, separating sort of like the tech from the narrative, there's a little bit of like, an S-curve around like the idea of like value extraction with decentralized technology. So, we do have to balance tech and narrative and make sure that the narrative works for all.
Very interesting. Steny, what is your thought about the value of money for the global population in terms of, let's talk about distribution of wealth, more maybe philosophical approach to decentralized finance. To which extent DeFi can actually impact and mean more equitable distribution of wealth? And in this regard, what would be the ideal balance and also communication with the traditional finance?
Yeah, it's actually a very, very thoughtful question. I see one way like DeFi doing a good job is that when you basically like, normally like when you create a bank account, it's quite a process. It's even in terms of what you have to do just to get means of payments and interact with other entities, other people financially, and then receive salary, income, and so forth. What decentralized finance, even like blockchain in general, does very well is that you can create accounts fairly easily just by generating addresses. And once you have that, and basically once you get into the system, you get funded. You can do quite a lot of things, and you kind of like have this accessibility from different parts of the world. So let's say I have equal access to DeFi yields as, for example, Min and Rune has, or some other person, for example, from Singapore, Thailand, and whatnot. So kind of like all of the finance isn't like restricted geographically, which kind of like makes things a lot more efficient, but also kind of like quite a lot of quite democratic in that sense. So definitely like it democratizes the wealth. I would say like kind of like wealth opportunities. That's more precise. Wealth distribution, it's always a hard thing because kind of like as the more wealth you have, the more you accumulate wealth. So that's a issue. So you can put different kinds of like barriers or mechanisms to redistribute wealth. But what for me is important actually is that kind of like everyone everyone has access to the same opportunities, and I think that's like the important part when it comes to wealth and building wealth. And another thing, what's very cool about DeFi and in general blockchain that is starting to happen, and it's very hard to see once yet at this stage, is that kind of like more value is coming into DeFi, and that value is also like, it's not just like cryptographic value. For example, like we have Ethereum or governance tokens that have value because of their functionality. But you see things like, for example, NFTs, real life value coming into on chain. And I think in the future, there will be more even like subjective value that is valued by individuals globally in a small scale, but kind of like have value. So kind of like what's interesting is that in DeFi, you can get liquidity without disposing that value that you have. And this is like what protocols like Aave and Maker actually are very good at doing, because you use the value that you actually possess, and that in real life kind of like it's too efficient to do in the same way. And when you have this like a global liquidity market, then you actually can do it in the same way that you might be able in the future use value like your property, basically your collections of whatever you have, and a lot of subjective value and your cryptographic value, and not ever disposing it, because you can always borrow against it liquidity when you need to. And this is one kind of like interesting side curiosity, which I've been like monitoring a bit and curious to see how it evolves. And I think getting real traditional finance involved, I think getting them to closer to tokenize different things, because tokenization isn't like that difficult process, like technically, you know, and the custody can be solved. Probably most good example of tokenization is tokenizing the dollar with USDC. It works pretty seamlessly and kind of like and it's a good example that you can do it fairly easily, and there's some trust custodians involved. But how technically kind of it's easy. Then there's the part of the regulations and other things that needs to be worked. But that is something kind of like where traditional finance has also resources to kind of like research more, and probably we'll see a lot of things happening in that sense.
Thank you, Stanley. Rune, this brings me to my last question. What actually are those things that we in the industry itself can do in order to involve more people, more institutions, more industries, including unbanked, including those who are not familiar for the moment with the technology itself? What is our role, and what are our tools in order to involve more people into the DeFi sphere?
I mean, so that is really the big question, right? I think that's what everyone's trying to really figure out to some extent. I mean, one thing that certainly has had a big impact, as Stanley also mentioned, right, is this, like the surge in rates that you could earn in DeFi, right? That had, you know, there was this DeFi summer, and that's kind of what really saw this like massive explosion and like an influx of new people coming in. And it was almost like a little bit of like a bait and switch, right? In the sense that for a while the rates were just completely astronomical, and you could earn, you could have a yearly rate of return of like 1,000%, and people would put money into that for just a few days, and they would actually get a lot of money from over a couple of days, right? And then that obviously that's always going to draw a ton of attention, right? Because people are going to tell their friends about that kind of opportunity, for instance, right? And the money really like piled in from that, and then now the things have sort of normalized, and you can't get those kind of completely crazy rates anymore, both because like the sort of the value isn't there, but also there's way more people, trying to get access to it. But so I think that's something that I guess it's always clear that obviously if you offer good rates, you're going to attract people. But now we've definitely seen also if you have this kind of like burst, that's really going to result in like a huge influx of people as well. I think, other than that, like other than sort of all the standard stuff, right? Like educational outreach and marketing and all of those things that I think, actually being tried quite a lot. And I also think this concept, what I was talking about earlier of, hiding away all the blockchain, right? And just like making, user-friendly apps that you have no idea that you're using blockchain, right? You're just getting the advantages of DeFi without the disadvantages of blockchain, so to speak, right? And I think like the final thing that I really would like to see more of, and that I'm also hoping that we can find some way to do in the Maker project, for instance, is just like literally giving people free money, right? Like the idea of I would just love to be able to somehow have some sort of like a decentralized community could create a budget for just like, figuring out everyone in some particular area, like especially unbanked people, right? Where you can have a huge impact, then finding everyone with a smartphone and just giving them, 10 DAI, right? And then now you just got 1,000 people that are sort of in the blockchain economy, right? And that are in DeFi and will likely stay there. And, it could very easily be like a positive investment to do that, because once you get those advantages and once you learn about it, there's no reason to go back to just using cash, right? And we have a few examples we've done of that, where we've like done in the Maker Foundation, we've done like some pilot programs where like basically the point has been to basically give, like in some cases, giving people money on their phones, or giving people like like these kind of like prepaid cards that actually run on crypto. And I don't think that it has really like stuck so that you can just give you just give a couple of people some crypto and then then now you'll sort of create a crypto economy, right? But I do think if you can do something like that on a larger scale and you can get like merchants on board and that kind of stuff, then I think there's a potential to really do some have a big impact in like one big initiative. So that's something I would love to see that actually happen at like a large scale where let's say an entire region is targeted, right? Or like an area with like multiple cities and villages and just everyone that you really try to create that concentration of users and then see if it actually sticks.
Thank you very much, Rune. That's really great. Min, what about you? This narrative between hype versus education. So what should we do in order to educate people, regulators, institutions?
Yeah, very much like what Rune said. I think the best way is to bring them down the rabbit hole, take them along on the journey. The biggest areas of investment that we really like is actually seeing like crypto being used as a form of payment for an otherwise sort of Web2 company, simply because, like what Rune said, if you can actually get crypto in the hands of people who are new to the technology and actually see what they do with it, right? Like, I think you kind of create an avenue for very non-linear outcomes to happen. One example that comes to mind is that we have a portfolio company called Community Gaming, and they allow gamers around the world to organize tournaments just between themselves, and they get paid out in DAI. And the gaming space is actually one area that's sort of riddled with a lot of fraud and there's a lot of unfair distribution. But here, you actually have a payment system that, pays everyone who participated instantly, equally, and they can access it and make it their own. And, you have some, the founders are actually finding themselves spending a lot of time educating people, where can they put their DAI, where can they put their USDC, sort of like the questions that they get are just totally fascinating. And sometimes having sort of worked in the space, we know all the benefits of having digital currencies, of DeFi. But I think when you have new entrants to the space, you also then get a fresh perspective on things and think about benefits and applications that you otherwise wouldn't have thought about. So ultimately, it has to come in a way that I think that's fun, that's exciting, that kind of allows people to be creative. The philosophical approach is certainly an important one. But I think we should welcome people who have their own approach and let them choose their own adventure there.
Thank you very much, Min. Penny, your last thoughts about the potential of redefining finance and bringing more people to rethink the financial systems they are living in.
Yeah, I mean, I just think kind of it becomes closer, all the finance becomes closer in the sense that you just have so many opportunities and everything's available. You basically have smartphone tree, and I think that's already is a big thing. So kind of if you start to use DeFi, and DeFi becomes quite interesting in the sense that it's de-risked enough, people will actually start to use it. And what I really like is having different user experiences. So I think what's interesting is that you could build different kind of user experience on top of already protocols that there is, or combining them. And I think just finance becomes more personalized in that sense. And I think that will be a quite cool step.
Thank you very much, Danny. Thank you very much, guys. That was really an exciting discussion. And well, the conclusion is that everything is in our hands, even though this is not physically touchable what we are working on. Thank you very much. Have a great day, and thank you very much, the great event, for having us today.